Hello, how are you doing? So today I'm going to teach you about candle science. So what is a candle science? Candle science is a really advanced stuff. Candle science is a very advanced stuff. Candle science is not for the weak. Okay, candle science is basically having a look at a single candle, a single time frame candle to tell you what the next candle might look like, right? Now if you wanna find maybe the next week's candle or the next day's candle, it's using the previous candle, okay, to tell you what might happen later on, right? So it's about uh, candle science is all about studying the BD arrays, the respect and disrespect candles, the structure, you know, it's having a look at a higher time frame singular candle to give you the clue, or to give you a certain kind of expectations on what might happen next. All right, candle science basically is it's studying, or revolves around the BD arrays, that is the fair value gaps, the swing points, you know, the previous candle highs and previous candle lows, okay, previous day highs, previous day lows, or the previous week highs, the previous week lows, monthly highs and lows, okay. So to give you a better experience of what I'm talking about, let's look at the charts, okay. So here I want to give you something about uh, something to give you a view of what to expect, okay, basing on the previous candle. Just study a single candle, look at the wicks, look at the body, look at the structure of the wall, order flow, or the order flow, and then predict the next candle, okay. So we are going to use the daily candle, okay, the daily candles, because I'm a day trader, so I love the daily candles. I love daily candles. And this is one way I tell my buyers, okay? There's nothing good than nothing feels better than waking up in the morning and spending a few minutes, and already you know what to expect for the rest of the day, if the market will be bearish or the market will be bullish in that case, okay? So right away, let us look at this chart, okay? So it's basically seeing where the price came from, and where the price is going, and where the price is at the moment, and what to expect based on the closures and the opening, okay. Now looking at this, we want to see this bearish candle. First of all, the price came from this fair value gap right there, okay, fair value gap right there. This is a it's a daily fair value gap that had uh, the the strength to push the price lower to this swing low right here, okay. So that's a swing low. So if you look at the current candle, the current day candle, this one, it's bearish, and because it's bearish, it closed it closed below the swing low, okay. If it closed below the swing low, this means that this candle has as a disrespected the swing low because it closed below. Normally you would expect maybe a sweep and then up, okay, but in this case it closed below. if it closed below, I'm expecting the next candle, the next day candle to be bearish and close below this low, okay? Close below this low, because this one closed below, and for me this is a displacement, it closed below it. So I'm expecting the next day candle to close below this current candle. So if for the next day, I would expect a bearish, okay? I would expect a bearish day, a bearish order flow. Okay, so let's see what happened exactly. So the price came to this low, traded into it, swept the liquidity and closed back in. Do you see that? So it closed back in. Let me enlarge it a bit. So this candle closed, this candle, bullish candle, initially it traded below, swept these lows, the low of the previous day candle, and traded back in, closing bullish. Okay, so for me, because it traded and swept the liquidity, it wicked this previous day low. So I'm expecting the next day to trade higher right there. So I'm expecting the next day candle to go up higher. So let's see what happens. Okay, you didn't get that? Okay, so let's have a look at this again. This candle, it was a Thursday's candle, closed bearish. Okay, it closed bearish. So my expectations, because it closed bearish, I won't have a real, or I won't have a real bias on it, because it's kind of an inside buy. You see, like it didn't touch the previous day high, it didn't touch the previous day low. So for me, I'll just let that play out and then predict the next day. Exactly. Okay, because sometimes it can't always work out the way you want. Okay, sometimes you have a bias in your head, like I want to be bullish, but things happen. It's normal about trading. All the time you may never have the exact predictions you had. Okay, so looking at this, it closed below. No, it didn't close below actually. Just swept those lows, swept these lows. Okay, and because this candle swept these lows with a wick, nobody came below it. Okay, so meaning for me, because it swept these lows and closed back in, that gives me a next day bullish bias. So I'm expecting the next day to go above this previous day high, right? Let's have a look at it. Exactly, that's what I'm talking about. You see, that's what I'm talking about. So if you are to go, if at all you had that prediction in your head, be like, this candle didn't close below, it swept, so I'm expecting a bullish day. You just go to the lower time frame, hit a 4-hour or a 1 hour, 15 time frame to look for entries, okay? And just be bullish. Okay? So in this case, this candle closed above the previous day, closing bullish. So my expectations again, okay? My expectations is to go bullish again. So I will be expecting the next day to go higher, because this closed above. It didn't close back in. It traded bullish, closed above the previous day high. So I'm expecting the next day to go bullish again. Let's see. Okay, that didn't happen. So it closed back in. So again, normally when it closes in, I would expect a lot of really reasons to give myself, certain expectation, because the market didn't play out so much. So it's not always that you have that clear expectations in to yourself. sometimes it can work out the way you expect. But just having this narrative, it gives you a better idea and a better experience, and the best way to have expectations in the market. Okay, so now because this closed bearish, I wouldn't have such bias. I can't say I'm gonna be bullish the next day or I'm gonna be bearish the next day. So I'm just letting that play out. Let's see what happens. So okay, sorry. Uh, sorry. So okay, I really fast forwarded a lot. So if you look at this candle closed back in. It traded below this, closed back in, and I would expect the next day to be bullish because again, this is my draw on liquidity. This high will be my draw on liquidity. And you see, this candle came above. This candle traded above this and closed up. So it closed up, meaning it gives me the next day that buyers might be bullish. So I would expect a bullish bias, okay, the next day because it closed above these highs. These are really high. It's a massive bullish candle. So I'm expecting the next day to close above this high. So I'll be bullish again the next day. And to add my confluence, this is my draw on liquidity. That's another high that I'm expecting the price to reach. So let's see what happens. Okay, exactly. So that's what happens. So you see, our bias was right. Okay, now if you see it again, this candle closed above the previous day high, closed above this swing high. It's not a wick, it's a whole body. It's the body itself. That gives me the next day bias to be bullish. Okay, so let's see. So I'm expecting the next day to be bullish, closing above this high. Okay, closing above that high, the previous day high. So I'm expecting a little retracement, then go up. So let's see what happens. It didn't happen. Do you know why? Do you know why it didn't happen? Because there is a fair value gap right here. You know, most of you didn't see that. This is a fair value gap. Okay, that's a fair value gap. And that's what I'm talking about. When you're studying the candle science, you should consider all the PD arrays in your chart. Okay, you should consider all the BD arrays in your chart. A fair value gap with swing points. Okay, the previous candle's high, previous candle's low. Now, having a look at this candle, it was a Monday's candle. This candle traded into the fair value gap. So, what is my expectations? However, if this candle closed below the previous day low, I wouldn't want to go bearish because this is a fair value gap. So I will still want to go bullish and target these highs. Okay, target these highs. So I'll still go bullish the next day, targeting those highs because this is these are fair value gap. And so the price came back to balance the price, then go back. So that's my expectation for the next day is bullish. Let's see. Good. So it was bullish. As you can see, it was bullish. And again, I haven't reached my draw on liquidity. My draw on liquidity is these highs here. And now that we are coming from a fair value gap, that gives me a narrative that we might go bullish again the next day. Okay, so let's see what happens. Good. So now it plays out so well. So now that we are here, this candle closed above the previous day's candle, closed above these highs, okay? And then if you can see clearly, there is this high right here. Is this high right there? So the price tapped into that high and closed back in. However, it closed above this high. So I'm expecting my next day to not have the real, or I can't really be biased so much. So I'm just letting it play out, because if I say I closed above the previous day high, yes, and I went bullish, closed above this high, yes, and I went bullish, but I closed back in. So I didn't, the price didn't trade above this high. So my expectations would be kind of, I just let it play out. I have no bias. Let's see. Okay, do you see? So it went bearish. Went bearish because the price reached the draw on liquidity right here. That's the reason why I wouldn't go bullish this time. Okay. So now let's have a look at this. The price traded to the previous day high. With the wick, there's no candle closing above, and the day closed bearish. And as you can see, there is a fair value gap just right here, right there. So my next day would be bearish to balance this price and close, or rather trade to this previous day low right there, to this gap, then maybe continue upwards. So let's have a look at it. Okay, it didn't really get to the fair value gap, but it traded up, so it was again bullish. Now let's have a look at this again. So it traded above this previous day high, closing above it. Okay, however, it didn't close above this swing high, So what is my expectations? Because if you consider this is a daily candle. This is the high. Which one overpowers the other? This is I believe this is higher time frame high. So if the candle didn't close above the higher time frame high, I believe this was the high of the week, maybe. So if it didn't close above this, even if it closed above the previous day high, I would still want to see prices coming down the next day. So my next day, I would want to go bearish. Okay, or maybe consolidate, because the price swept this high with the wick and closed back in. So let's see. Didn't happen. Okay, didn't happen because the price went this high, went to this swing high. Okay, so my point is, it's not every time that you will get it right. It can work today, not work tomorrow, but I promise you it works most of the times. Okay, it works 80% of the time. If you study this, trust me, you will have the whole world on your feet. Okay, now looking at this, considering the previous high, swing high, this candle traded above it but closed back in. But even if it closed above the previous day high here, okay, here, I wouldn't go bullish, because considering this, looking back left, the history tells you a lot. I always say, if you are trading, the history tells you everything. Okay, always look back. If you don't look back, If you don't know where you're coming from, then trust me, you won't go. You know where you're going. Okay. So having a look at this, the price traded above this swing high, swept the liquidity. So that was the drawn liquidity, swept the liquidity, and then closed back in. So that gives me the next day bearish bias. So I'm expecting the next day to trade below this previous day low right here. It can close below it or it can just wick. So let's see, but my next day bias would be bearish. Good. So as you can see, it closed below, it didn't close below it, but it traded below it. So it was true, it was bearish. Okay, and it was bearish, and there was this fair value cap. So fair value cap. This increases my confidence. All right. So we were bearish. If it, however, it didn't close below the previous day, but the price has just come from a major swing high. So I'm expecting the price to trade into this fair value gap, this one. Okay, so I would be bearish the next day again. Let's see. Good. Okay, so this is how to tell your bias the next day. Let me tell you guys, if you know this, if you master candle science, trust me, you look at forex trading on a simple way. Nothing will be complicated again, because if you know what the next day might gonna look like, if you know the bias of the next day, seriously, so you just go and look at the entries. If you're expecting the next day to be bearish, you go the lower time frame, look for the points to go low. Simple. If you're expecting the next day to be bullish, look for points to go bullish, right? Based on the previous day's candles, the wicking, the bodies, the closures, okay? So if you now see this again, let me have this as the last example. If you look at this candle, okay, this candle closed, or it disrespected this fair value gap, closed below. And if you can see below again, there is another fair value gap that is unmitigated. It's unmitigated. So for me, having this candle closing below the previous day low, disrespecting the fair value gap, and there is a fair value gap just right below it, that gives me a bearish expectations the next day, right? So let's have a look at it, how it plays out. Exactly. So guys, this is what I'm telling you guys. It's very simple, and the moment you get to understand how to find your bias, just by studying the candles, you have everything. And trust me, it's gonna be okay. All right. So thank you for watching. I think this is enough for you to grab my idea or my perspective. Just telling the next day bias if you're a day trader. And you can do this again. You can use the weekly candles or the monthly candles if you're a swing trader. Okay, you just do the same thing, the same thing, and you will get the same results. Okay, so thank you for watching, and I hope this really helped. Okay, just go apply it in your charts and just use it to make your analysis and trade. You can really enter alone by using this. You can get funded just by applying this. Okay, so thank you for watching, and if you've not subscribed, subscribe. And now that I've had the candle sun thing and how to tell the buyer, The next video I'm going to be uploading will be how to make the entries, how to go into the lower time frame and make your entries. Okay, so thank you for watching, and God bless.